As you can see, it is a sea of red out there on the S&P heat map. It is currently down by 1.3%. We did pick out from that slim little green line at the top of the screen there, though, a couple of retailers doing pretty well. One of them is Kohl's and the other one is JCPenney. In fact, it is up better than 4%. And that is after George Soros revealed a big stake in the company. Company being JCPenney. It's up by, as we say, 4.5% to $13.70. He added another 2 million shares to his already pretty big stake in the company. Also, the New York Post is reporting same-store sales at JCP are tracking positive in August. So let's hope that things are turning around there. In the meantime, let's get to some five-star stock picks from the Lone Star State. Joining us now is Craig Hodges, co-portfolio manager of the Hodges Fund. Craig, great to have you with us. And I did actually notice out of your three top picks, two of them are from Dallas. A little bit of Dallas bias going on there?
Yeah, we are coming across a lot of good companies in Dallas. In fact, this morning I spent the day at Encore Wire, and I heard a fantastic story there. So there's some really good Dallas companies that have a real bright future. Okay,
let's talk about a couple of them. We've got Trinity Industry, rail car manufacturer.
Yeah, Trinity, I've mentioned this one before here. Company's doing fantastic. Of course, they make rail car. They're really benefiting where their competitors aren't. This oil by rail is a big deal, and you've seen Greenbrier and some of their competitors come out and say that that part of their business is slowing down. But Trinity, we follow these guys for years and years, and they're telling us they have better visibility now than they've ever have. We see $4.50 of earnings, here in this next year or two, and possibly in excess of $5. And at $39, we think the stock looks very, very good. And they've done some very smart things, from getting in the leasing business, which is going to make the business a lot less cyclical. So we love Trinity, one of our largest holders.
And we've also got Matador Resources, which is a shale play.
Yeah, Matador Resources, a great little company run by a guy named Joe Ferran. He's got a great track record. He's built a fantastic management team, or a team there at Matador. They're drilling in the Eagle Ford and in the Delaware Basin, and these guys just know how to make money. We kind of joke around our office. He's kind of the anti-Aubrey McClendon. Runs a very tight ship, does not waste money. Just a great oil executive.
A tight ship is a good thing. In the meantime, the third one you've got here is Shoe Carnival, and I checked out their website and I thought, oh, this is my kind of website. And yet I was also wondering, how does it stand out for you in terms of its competition? You've got competition like Zappos, which is owned by Amazon. You've also got DSW as well. What's different about this company?
Well, they do just more or less go to the family shoe channel, and I believe they're going to be able to get into areas. They're in tennis shoes. They're also in dress shoes. So it's not dependent on fashion. And they're going to take their store base from probably 350, 360 stores they have now to probably in excess of 700 stores over the next several years. So this is a real good growth opportunity, we feel like. And that's one thing we've noticed through a lot of the recession times, is that people continue to buy shoes. So it's a niche of the retail industry we'd be very comfortable in.
Well, I certainly feel that shoes are a complete necessity in life. Thank you very much for joining us, Craig Hodges.
My pleasure, Mandy.
Coming up next, whale watching with Warren Buffett and the very, very best of Herb.